Yeah, good afternoon, everyone. We are very happy to have Sivaraman sir with us today for our webinar on exploring valuation as a career and how to become a certified valuer. Please confirm whether my voice is audible to all the people.
Yes, audible.
Before getting into the webinar, I would like to give a little introduction about sir. I think most of the people already know, but a little introduction. Short. Sivaraman sir is a highly experienced professional with over 30 years of experience in project management and event. He has also worked on big projects for companies like SABIC and Government of Tamil Nadu, handling everything from the project and cost control. And as you know, sir also holds important certifications like project management professional and chartered engineer. And is also known for his practical knowledge in contracts, budgeting, project execution, and skills that are very useful for valuation work and site execution. And, many people in the industry look up to him, not just for his experience, but also for his willingness to guide others. He's expert in guiding others and sharing knowledge. And uh, and Sai is also inspiration to many of the people in the industry. And today, Sar will share about the insights on how to start a career in valuation and what it takes to become a certified valuer. Uh, Before getting delay, I think we can welcome Sar. Yeah, good afternoon, sir. How are you?
Good afternoon, fine. Can I start sharing?
Yeah, I'll stop sharing.
Is my screen visible now? Hello?
Yes, sir. Yes, sir.
Yes.
Is it visible?
Yes, sir, it's visible.
Yeah. Good afternoon, my dear fellow engineers. Welcome to another session on knowledge sharing. And today it is on valuation as a profession. It is just an overview. If you go to the YouTube or any other social media, you will find a number of channels and videos on how to become a valuer and so on and so forth. But it's my attempt to summarize the learnings, lessons, the experience I gained many years before in some 30, 40 slides and try to give some justification to your expectations. To start with, in today's webinar, it's going to be aligned in this manner only. This is going to be the agenda about, we'll see about what our valuation and how it got evolved over the years and what's the types and purpose of valuation and how we do it, the evaluation approaches. And finally, the most important question, how to become a valuer and what are the standards and regulations guide your evaluation practice and opportunities for valuers. And finally, how the future of valuation is going to be. When you become or when you choose to become a valuer by profession, how you will do your business in future. To start with, the usual question, what is valuation? We have different definitions. Here I'm, is it a science, it is an art, it's mathematics. Actually, it's a combination of a little bit of all. It's an analytical process of determining current or projected worth of an asset or a business or an investment. Can be anything. Valuation doesn't limit to only buildings. It includes buildings, land, buildings, and other things. But it is also for any other financial investment, financial instrument, and business. Okay. When I assume most of you are civil engineers and you will be interested in property valuation and land and building valuation. The property valuation in particular is a quantitative process of estimating the fair market value. Here is the catch, the fair market value of the property. So this is all about valuation. The key term here is the fair market value. And there are 4 foundation pillars of any property valuation. Number 1, demand. How much people are willing to take it in the market demand. How many people need it? And utility, what kind of the purpose it is for residential, it is for commercial or any other business activity, it is a mixed use. And third is the scarcity. This is the opposite of demand. It's about availability. How much is available for the consumers or buyers? How much is available in the locality or within the framework?
Excuse me, sir.
Yeah.
Yes. So your voice is fluctuating.
Still fluctuating? Now?
Now okay, sir.
Okay. So I'm having some device. Finally, the transferability. There are different kinds of property, legal status of the property. It's called the freehold, the leasehold, this kind of legal status. If the legal status is not good, no one will want to occupy even. So the transferability is also one of the foundational pillars of property valuation. The next question is, what's the purpose of valuation? Why we do valuation? It's numerous and even it is increasing. When you see the list, you will see it is increasing only. Number 1 and foremost is the mortgage or collateral for bank loans. When you go for a loan to build a house on that property, or you can collateral, use this as a collateral security to any other loan you are buying to run your business or any other purpose. This is the most conventional and common use why evaluation is required. But it is not limited to that. Purchase or sale of property. When you buy, you will want to know what is the market value. And the joint venture developments, when a developer comes to a landowner, landlord, and then they want to have a joint venture development of a residential apartment complex, then evaluation is required. Settlement and partition of property, family properties during the settlement among the children, and financial reporting. In some cases, for in businesses, you have to it becomes a compliance for legally reporting your financial status. So this is required for this. And then taxation purpose, taxation and the different acts, Wealth Tax Act is there, and then Income Tax Act is there. So for the taxation purpose, also this valuation is required. And mergers and acquisitions, companies join together, companies are sold, one company is buying another. Before buying any company, you will want to know what is the value of the other company. And the settlement of any legal disputes, arbitration, other things. Then expert witness. In the legal dispute process, you will an evaluator can go as an expert witness and to validate the numbers or to justify the number in front of the arbitral court or something. Then the investment decisions. When you want to make an investment, when you want to buy an apartment, to buy it or rent it. Now the famous personal finance decision making is whether to rent it or buy a house. And this kind of decision making, you need evaluation. And going forward, any visa application nowadays, they want how much value of land or immovable property you own in this country, so that this will convince the visa authorities that you will return to this home country, will not overstay in another country. So for these purposes, valuation is required. Then what are the categories of valuation? There are different categories you might have come across or you will come to know now. There are land and buildings. It's most common where there is an empty land or a building is on the land. This is the first and most common combination. Then plant and machinery. This is for factories or any MSME units. When MSME unit want to have a loan, go for this kind of how much plant and machinery you have a valuation for that. Unfortunately, civil engineers cannot do it. For that, a different qualification like mechanical engineering, automobile engineering, these qualifications are required. Then plantations and agriculture land. This is not part of land and buildings because this need a different specification, a degree in agriculture engineering or soil. Hello.
Sir, your voice little fluctuating.
I'll try to address it because of the Bluetooth, I
Oh,
think.
ah,
Yeah, I'm coming closer to it. So plantations and agriculture land is another variation to that. When the gems and precious metals, gold, silver, all these come under this gems and precious metal valuation. And then mines and rocks, this is quarries, mines, rocks, mineral, all these are one category of valuation. And works of art and antiques, there's a painting or an old sword of a king, all these comes under this category of valuation. Companies and businesses. And so this is a little different. This has more commercial aspect. Civil engineers again will not be able to do this. For this, you need a different qualification like a chartered accountant or company secretary membership, something like that. Then the financial securities, stocks, shares, bonds, debentures, all this, etc. These are called financial securities or financial instruments, we can call. So these are categories of valuation. And a few definitions here before moving further for your better understanding. What is cost? Cost is the amount you spend to produce the product or service. So which means this is something happened in the past. So in another way, cost is the fact. This is the cost you incur, you spend to make this product or service or a building or whatever it is, the asset, we can say, cost to create an asset. So it has happened in the past. So that way, cost is a fact. You cannot change this. You cannot reverse it. You cannot modify this, whatever already happened. And price is a little different. We normally use cost and price interchangeably. When you go look at closely, these two are different meanings. Cost plus the financial reward you claim for making the product or service. The one who has made the building attach his profit. In other terms, it is called profit, markup, margin, different terms they call it. But cost plus the financial reward you claim for making the product or service is called the price. In other terms, price is an entitlement. You become entitled to claim to claim for your reward as a profit or whatever fashion it is. And the value. Value is too much different from these two items because the value is present or future. Sometimes it doesn't have anything in the past, but what the consumer or customer believes the product or service is worth for. In other words, it is not the fact, it's a belief. It is an opinion. It is there in the mind. It is nowhere written that there is no standard, this is the value and all. First it comes, the value is first bringing up in their mind. It is a belief, it is an opinion. So in other words, value is an opinion. So these are the basic differences you need to understand before starting anything reading about valuation. Then the history of evolution, history and evolution valuation. This is too interesting topic for some of you. How we started doing valuation starting from beginning in the earlier days. Land being one of the common form of assets in olden days. So one who has land considered to be rich in those days, and when we come to British era, the first uh, terms about valuation came in 1850. Because they wanted to define who can own the land, because the East India Company, when they came in, they wanted to acquire all the land by some transactions, and then they started determining what values we can pay, who can own the land, and then they started surveying and then records, all that. So the first Valuation Act came to be effective from 1850. The purpose of all that to define who's the property ownership, land surveys, and records. Next came the Bengal Tenancy Act 1885. You see how old is this? 1885, to calculate the rent based on the land value. So the practice of acquiring some piece of asset or a building for a rent. How to determine the rent? One of the primitive ways of determining rent based on the land value, and Indian Stamp Act. This became when the registration started, when the registration process started, you must buy the stamp matching to some percentage of the value of the land. So for that, the land value is important. This is how the valuation slowly gained importance for as the purpose added every time together. Then the Income Tax Act 1961 came. After independence, for the economic development of country, income needed to be taxed. At the time, they taxed based on how much land you own, and for that, the land value became one of the factors to be considered while assessing your income tax, how much you owe the government. Then came the Institution of Valuers in 1968. This is to my knowledge, this is the oldest institution in India, which was started for the practice and propagation of the profession of valuation. So they started determining some guidelines and some trends, how to do it, and then worked closely with the government organizations to bring about the new ideologies, guidelines, and membership processes. All that became from 1968 onwards. Then the businesses started growing up post-independence. Then there were other financial institutions, financial advisory or financial framework institutions started coming up. These are called ICSI, Indian Company Secretaries Institutes, and Indian Chartered Accountants of India, and then Indian Cost and Management Accountants of India. Like this, many institutions started coming up. They also started giving some guidelines about valuation of the financial assets, company valuations, and stocks, shares, all these valuations started guiding. While IOV was primarily limited to the land and building, slowly they came into other forms of other categories of valuation also. So these are called classes of valuation: land and building, financial valuation. All these are called classes of valuation. So who were doing this valuation? Who were owning the title of valuer in those days? Only retired officers and retired PWD engineers were taking up these roles, valuer roles, as a post-retirement assignments, because these people know about the land, its measurement, and which law governs, and how to measure property, which is the legally accepted way of measuring the property and valuing the property. Basically, which will sell or which will be accepted by the bank for giving loan against the land or building. So this is why the retired officers came to be the first valuers, those who are our first valuer community, I can say. Then the first code, Indian Standard Code for Valuation of Immovable Assets, came in 1978. So now this code is no longer, but it is replaced by some CPWD standard for immovable assets. 1990s it was released. So this is how the valuation became into effect and legalized. Then Indian Institute of Valuers in 2004. This is the brief history of how valuation came in as a practice in India. Everything is going fine, and until 1990s, when the shift happened, 1990s, you know what is LPG? Liberalization, privatization, and globalization. And because of some international geopolitical situations, India went to in a bad economic shape. So came the LPG scheme in 1991. So it opened up many investment opportunities for foreign companies to come and set up in India. So there was a surge of investment avenues and need for more money to invest in those businesses and then become partner in those businesses to start new business ventures, importing, exporting. All this started flourishing a lot. So for that, what you need more money. Where you will go? You will go to the bank to get the loans. When you go to the bank and other financial institutions, not only banks, other financial institutions also grew along that time. So they will want a collateral security. So the real estate activities increased at that time. A lot of offices, many factories, new buildings, new areas, real estate developments happen. So for all that, again, you need money, and then you need to go to the bank. The bank will ask for a collateral security. Then they will want what is the value of that against which they can give a loan. This process you already knowing. But where the mistake happened, because of this surge in the industry, the valuation practices become inconsistent and erratic valuation, overvaluation of a property or asset for the purpose of getting more loans. Like this, the inconsistency started in the valuation practice. So it grew to an unimaginable situation where there is a huge sum of accumulation of non-performing assets, which means banks gave the loans are not coming back as a repayment. So the economy started suffering, and there was a huge distress on the financial institutions, including major banks in India. You all know all these that all these are written on the social media. I don't want to go into the numbers, and people faltered, and it will open up many avenues of political discussions. Who is right, who is wrong? But as a whole, the country suffered, the economy suffered, because of which the non-performing assets for the loans given against a few people, the banks were unable to disburse further loans for agriculture purposes and the small and medium enterprises. So this is how the shift happened in a bad direction, and someone has to take some action and to correct the situation. Then many committees were formed. RBI was involved in that, and then many committees were reform. The financial reform committees were formed based on their advice. There was a body started. It's called Insolvency and Bankruptcy Board. Why it was started? Because some of the people, those who have bought huge loans and are unable to pay for various reasons, they filed bankruptcy. It all ended up there. So that is why they wanted to first regulate who can file insolvency, who will deal after that, the after effects, how to deal after that, the business or the individual or the company or the asset, or the whatever is available as a collateral. So then they came with the idea of IBBI. See, the registered valuer was introduced under Section 247 of Companies Act. Many changes were made, many acts. Why this happened? As a reason, they found out that the registered valuers or the valuers in those days, they have made an erratic proposition of asset values against which the loans were given. This is among with other irregularities. One of the key is the registered valuer. This is how they ended up defining who is the registered valuer or who will do the valuation practice in India. So the Companies Act 2013 247 defines all the valuation in this country or for any against financial loan to be done only by registered valuer. And then Insolvency Bankruptcy Code of India was formed in 2016. Before that, there were many discussions. The Insolvency Bankruptcy Bill was passed in the mid of 2015, and based on which the Insolvency and Bankruptcy Code of India was formed. This is called IBC. We call IBC 2016. And then, based on the recommendations, an Insolvency Bankruptcy Board of India. Who will govern this? This board will govern. From October 1st, 2016, this board is first started functioning. And what is their roles? And there are many other law also was Companies Rule 2017. It says who is the registered valuer, registered valuers and valuation. This rule was also changed. There were many other rules changed to be in alignment with the Insolvency Bankruptcy Code. Income Tax Act 1961 Section 55A also was defined that any value of any income tax can be assessed based on the certification given by any registered valuer. All these acts are defining only one thing: it's the registered valuer. And who can do valuation? Only registered valuer. And who is called as a registered valuer? This is the part of the solution. We can't say this is all the solution, only part of the solution. And then came securitization and reconstruction of financial assets and enforcement of Security Interest Act. This came in 2002, so it's a long act. In short, it is called the SARFAESI Act 2002. You know, when somebody is defaulting the bank loan and his property is auctioned, bank gains authority to auction the property of a defaulter under this act. This is how this act is serving or protecting the interest of the financial institutions. Okay, accordingly, the framework was formed. What is the framework? IBBI. As I explained to you already, this IBBI is the governing body. What it will do? Principal regulator of insolvency and valuation proceedings in India. The sole authority was given to this board. Earlier also, something similar was done, but it was done by various bodies. There was no single accountability or ownership among those government bodies. So they wanted to fix the accountability of a single body by empowering them, giving them the total ownership of this procedure. So establishing standards and guidelines for valuation and valuation practice. Registration of eligible individuals as RVs. They are bringing another entity called Registered Valuer Organizations, Registered Valuer Foundations. They will in turn screen the eligible registered valuers. So they are there. This process also governed, managed, monitored by IBBI. Then recognition of registered RVOs. I told you the registered valuer organizations. So IBBI alone cannot do all these things. That is why they created a framework of another body called RVO. And monitoring and conduct of RVs and RVOs. Then it becomes a responsibility of IBBI to monitor the conduct of both registered valuers and registered valuer organizations. Then any disciplinary action if people are defaulting or if any valuer is found indulging in unlawful practices or unacceptable practices. Then the entity called RVO, what is its duty? To enroll eligible professional persons. Individuals, it may be individuals or it may be companies, it may be joint venture companies also. And provide training as per selected class, selected course or selected class, we can say. And this includes the land and building and the plant and machinery also. And provide membership to those individuals, eligible individuals, after giving training and they pass the exam. Provide legal consultancy with IBBI. Since RVO is a body of all professionals, individuals, and organizations put together, from their experience and lessons learned, they can provide consultancy to IBBI to further amend the law as and when required or liberalize the law as and when required if it is acceptable to IBBI board. Provide training certificate. Once you undergo the training, they will provide the training certificate. Provide a membership certificate. It's called the certificate of practice. This is the final approval then valuer need to get to practice as a valuer. Then who will conduct the examinations? There is another body coming into the practice, which is called NISM. This is nothing but National Institution for Securities and Markets. So in financial markets, there are many certifications of the personal finance advisor. So all these courses are conducted by NISM. So this is also related to the financial practices. That is why NISM started conducting the examination for IBB curriculum. So these are the people who are involved in in regulating the profession of valuation in India at present. So I'm happy to share that evaluation is the only part of civil engineering profession that is regulated in India. Otherwise, none of the engineering in India is regulated by law. All these, whatever happens at site, at a construction site, is governed by the civil and criminal procedure law of the country only. For engineering practice or engineering profession, there is no law, which is there in even in small countries like small neighboring countries. All countries have the engineering bill already passed, but India is still lacking in that. Senior engineers are still fighting for it. That's a different matter. And here, all these organizations, but whoever I mentioned, all the law, what they are trying to do is to define the valuer, who is the registered valuer, and what he will do. What is the basic responsibilities of a registered valuer? Number one is asset valuation, as you know, determining the fair market value of assets during the insolvency proceedings. Insolvency proceeding doesn't mean the last one, even giving a collateral, your risk assessment, the insolvency proceeding started from that time only. But we don't know because it is part of the procedure. And report preparation. Once you assess the fair market value, it needs to be presented in a form which is acceptable by the loan giving authorities. Earlier, when the retired people were functioning as the valuers, merely one page report. Who is the owner of the land? What is the land? And we don't have any objection. And like this, one page only. Nowadays, I have seen even valuation reports running up to 80, 90, 100 plus pages. Valuation reports I have seen. So the report preparation is an art by itself, and if you become a valuer, you will have a special training for this. So drafting detailed and comprehensive valuation reports, which provide an analysis of valuation methods, assumptions, and conclusions. So this is one of the key responsibilities of the valuer, and stakeholder communication. Once you prepare the report, you will not keep it to yourself. You have to communicate with the resolution professionals, creditors, and other stakeholders to clarify or resolve any questions regarding asset valuation. So once you get your money and give your certificate, your duty is not limiting to that. After that, whatever happens to this certification, whether it goes for any litigation or it goes for insolvency proceedings, you may be called for giving some clarifications and justifications on what basis you give this value. So this is also part of the responsibilities of value. And compliance, ensuring that all valuations are conducted following IBBI guidelines and industry standards. So these are the key responsibilities of the registered valuer. And then what is this any qualifications required? Yes. For bachelor's degree in
Hello.
finance. Hello?
Sir, voice like little low.
Now? Yeah, wait. My internet. Okay, fine now.
No, little more.
Still,
Yeah.
what to do? Now it's stable.
No, sir.
1 minute. I'll switch to other.
Hello.
System volume is low, I think, sir.
Is it okay now?
Your system volume is low, I think, sir.
Is it okay? Fine.
No, sir. Your system volume. Can you increase your system volume?
Let me check. Is it
Increase.
fine?
More.
It's all right now?
No, sir. Increase more.
Let me check another mode also. Sorry for all this mess. Hello.
Hello.
Is it audible?
A little bit low, sir, actually. That you can keep full, so that it will be good.
Is it fine?
Okay, sir.
Oh, sorry for all the mess. Technology never favors maybe older people. Okay. Since you have a bachelor degree in finance, commerce, engineering, technology, law, or architecture, are all eligible to conduct at least the land and building. If the architecture is done, land and building. If the law or any finance, commerce done, you can do for business valuations. Okay. What about the other qualifications like chartered accountant, company secretary, CMA certifications? These are called the professional certifications. Once you have earned this, and you become eligible also. You need some experience also. After bachelor's degree, you need 5 years of experience. After a master's degree or after earning the CA or CS, you need 3 years of experience. It's not only that, you need to undergo a training, 50 hours training program conducted by registered valuer organizations. There are 16 registered valuer organizations in India. And the first one was some estate managers and appraisers of India. I think it's from West Bengal. They were the first to get enrolled under this law, IBBI code and IBBI regulations. And now almost 16, the recent list I came across, about 16 RVOs are there.
Hello, sir. Excuse me.
Yeah.
Venkatesh this side.
Yeah.
Yeah, the work experience as in like, is it be in line with the valuation only or anything will be fine, sir?
Anything on your trade, because this is only the entry point. You have not become a valuer until you complete the 50 hours training program and become a valuer after registration. So till such time, you are not considered as a valuer. So they will not expect you to have a valuation experience, any experience in your own trade.
Okay,
because this is nothing but the valuation is nothing but a combination of a little bit of your original profession, be it be commerce or engineering or architecture or law, and little bit of law, general law, little bit of real estate law, little bit of mathematics, okay, arithmetics. It's a combination, little bit of English. It's a combination of all.
Yeah, got it. Thank you, sir.
Then the toughest part comes, the valuation exam. It's a 2 hours exam conducted by NISM. You have to appear, register in the NISM website and then appear for it. There are 87 questions and 100 marks, 60% to pass. What are these 87 questions? 74 1-mark multiple choice questions and 13 numbers 2-mark multiple choice questions. So put together, it is 100 marks and 60% is pass, and 0.25 negative mark for any wrong answer, which means 0.25 mark for 1-mark question and 0.5 marks for a 2-mark question. It will go negative for every wrong answer. Okay, this is the toughest part for any young civil engineer, because I have seen people with 40 plus, 50 plus, even 60 plus have just like that passed in the first attempt itself, because they have been doing this valuation practice for many years. before they get into this, because this regulation came in between, but they were doing valuation for many years now. So they are already aware of the law and the valuation methodologies, evaluation approaches in practice for several years. They pass it easily. For youngsters, it may be a little difficult until they come across the terms used, the terminology is used, the law, it's difficult to remember the law and the law sections, amendments, years. So this is application of law. It's not, you will not be interpreting the law, you will be just applying the law. So for youngsters, I feel some 4 or 5 times you have to go through the study material. Once you go for this 50 hours training in any RVO, the RVO themselves will give you the study material. I suggest to pass this test, you need to undergo the study material at least 4 or 5 times to familiarize yourself about this procedures, process, the law applied and all. So that is enough. You don't need to read any other book. If you need to read any other book, read the land and building study material issued by the IBBI themselves. IBBI have already released land and building, plant and machinery. Separate books have been already released by IBBI. All are available for free download. But this registered valuer study material, once you register with them and then undergo the training, they will give you this study materials. That is enough. That covers enough and more, because many manuals given by them also includes case studies. Case studies are important. These are your standing examples on how evaluation is done, in what circumstances and in what situations, what kind of approaches are taken. Okay, for any further detail, you can go to this website for any procedures. There an FAQ booklet is also there. Humongous volume of information is already available with the latest updates in IBBI website themselves. Normally, the government websites are very slow in getting the recent updates getting posted in the website, but to your benefit, this IBBI gets updated very frequently, maybe in a month's time. All the recent things are getting updated. Okay, let us deep dive into the exam pattern. Here you can see, 1 minute. Here you can see the exam question patterns also. These are the syllabus. This is part of a heading of the syllabus also. There are 12 sections. Number 1, principle of economics, microeconomics, macroeconomics, then bookkeeping, accountancy, general law, introduction to statistics, and this is already available. I don't want to read the list again. But what I want to highlight here in this slide is you see the weightage assigned. Here, general law 9, all others are only 3, 2, 3, 2. Here you see laws related to real estate. Your RERA also will be coming in this chapter only. Then valuation of real estate, 9 marks, 9 here. And income approaches of valuation, income approach, market approach, and cost approach, 7, 7, 7. And you see case study, 26 marks here. This case study is having 13 2 marks questions here. That is why it is having too much weightage here. You need to go through all the case studies. Unless you go through the 50 hours training, you will not have the vocabulary to understand the terms used in the case study. That is why this 50-hour training is made mandatory to take up this examination. The case study is important, and once you go through all the case studies, and you can go to any internet, you can search for this kind of case study. There are thousands available for you to discuss among your friends, challenge which is right, which is wrong. So this is what I want to highlight it, where the importance is given. General law, the evaluation of real estate and real estate approaches, and the case studies. And here you see the report writing is also given some 3 marks. All these are 1 marks questions, and the case study will have 2 marks questions will be there. Okay, this is the pattern of your examination. And the case study is compulsory. If you fail in case study, you will not fail this examination. And the others are, you can give it a choice also. Case study is compulsory. You need to secure the minimum number of marks in the case study. Okay. Next is, okay, let me go through the roadmap, how to become. This I just mentioned about the examination patterns and then weightage to the question papers. Let us go to the roadmap. Number one, first you have to become a primary member in any in the nearest RVO. You can become any RVO in the India out of the 16, but I would suggest nearest RVO because of easy communication. Sometimes you may have to go in person, and you may choose to attend the RVO register the 50 hours mandatory course in person. I would suggest go in person only. There are online trainings also conducted, but I would suggest to take the in-person training of 50 hours. Take this 50 hours training course and get the certificate. Once you undergo this 50 hours training, you will get one certificate. And register at NISM website and pay the exam fees. Number 3. So once after you get the certificate only, you need to go for this registration, because when you register for your exams, you may be asked to upload this training certificate also as part of the proof that you have already undergone the minimum requirement. Attend and clear the exam. This is again the toughest part. Any freshing or budding engineer, this is the toughest part, but you need to work for it. But it is not all that tough like your engineering examination. Again, I'm telling you, it is just a combination of little bit of everything, but not very deep into it. Even in mathematics, you will be asked only about the arithmetical mathematics only. You will not even microeconomics, macroeconomics. It is all simple application of simple mathematics only. You will not go with the higher order differential equations. Then apply to IBBI through RVO for registered valuer and get the RV registration. This is the important milestone in becoming a registered valuer in India. You have to apply in the IBBI website through RVO. In this process, there will be a lot of the transactions between you, IBBI and RVO, back and forth. The transactions will be there. They will be asking for more information. And I want to mention here, up to the appearing and clearing examination, you can be employed anywhere. You can work in some organization, and then you can undergo the 50 hours training, register for exam, and you can clear the exam also. But at the time of applying to IBBI through RVO, they will ask for the resignation copy of your latest recent employer. Because when you start doing your registered valuer practice, you are entitled to own your company, or you are entitled to do the valuer practice as an individual, but you are not allowed to become an employee under any organization to do your regular civil engineering job. Okay, this is one of the primary requirement. And I know the youngster mind, once I become a registered value certification, at that time I am unemployed. I can say I have resigned. But after that, what if I join? You can do it, but RVO, once they find out, they will take any disciplinary action. You will become susceptible for disciplinary action by RVO. RVO will report to IBBI. IBBI will cancel your registration. This is the maximum consequence. Okay. So once you become a registered valuer, you are not supposed to work as an employee in any other company. This is one requirement. This is, say, some 2-3 weeks or even 1 month procedure. There will be more scrutiny of your papers. The multiple back and forth communication will happen among IBBI, RVO, and yourself. And once you register, are you okay, or can you take the registration practice? No, you cannot. Still one more pending is there. Apply to the same RVO where you have become the primary member and where you took your 50 hours training. As a RV, you have to register. This is the final register as a registered valuer. Earlier, you became the primary member here, first step. After IBBI gives you the registration, IBBI will not give you the registration certificate to you directly. They will only send you the soft copy to your email ID, and the hard copy will go to RVO, which means they are forcing you to go with the RVO. This is a framework, gentlemen, you listen. This is a framework where the IBBI wants to have a total control, and they cannot control you directly. So this is how it happened. Earlier, all the registered valuers are registered with IOV, or registered under Income Tax Act, or registered under Surface Act, registered under Wealth Tax Act. They were doing practice independently because they have already registered with multiple bodies. So this is how the inconsistency happened, and a lot of unacceptable practices happened, because of which economy suffered. So they don't want to end up the same situation. That is why this framework is created. RVO will govern, and IBBI will govern the RVO again. So that is why they are giving this kind of loophole, multiple checkpoints. All are done what? This basically they want to avoid the situation where the risk of non-performing asset increase and choke the economy. So basically, they are transferring the risk to RVO and RV, transferring the risk and accountability of giving a fair market value practice to these organizations, so that ultimately the financial institutions become risk-free. This is a risk transfer mechanism, and all are aimed at only one particular thing: who is the valuer and what he is expected to do. This is the one. And so finally, you have to apply to the same RVO as a registered valuer and become an affiliate. So only then you are, after that, can you do it? You cannot. You cannot do value. One more step is pending. Get the certificate of practice from RVO. RVO, after you apply as a registered valuer, again, they will give the original certificate of registration from IBBI, and also the RVO will issue a COP. It's called a certificate of practice. Only then you can sign, stamp as a valuer. So these are the key steps to the roadmap to become a registered valuer in India. When I say registered valuer in India, without that, nobody can do valuation in India. Yes, you can do it. Even the National Building Code is authorizing you to do valuation, any civil engineer to do a valuation on land and building to some extent. But whenever the client, whenever the authority or entity using your valuation, if they determine this valuation should be conducted by an RV, only registered valuer can do it. If the authority says, doesn't give any regulation like the valuation should be done by any RV, anybody is authorized to do it. For example, if I want to buy a land or sell a land, I want to know what is the value of that, I can go to any non-registered valuer also and get the valuation done, because I have not stipulated any requirement that the valuation should be done by RVO. But for the practice of or any financial matters involved, where the bank is giving loan or any other financial institution is giving loan, or you are going to buy a small company, a big company is buying a small company, all these are big money is involved. In those cases, better to go with the registered valuation. Earlier, all banks used to have a panel of valuers, and they were before 2016, they were not asking for any RVO. Any valuer can do it, but for to become an empanel valuer, they set, each bank set their own criteria. It was not consistent at that time. But after IBBI regime, everything is unified. You don't have to register under different acts. If you become RVO under certain class, you are eligible to do that valuation under these classes only. So you don't need a different we don't need to register under Income Tax Act or the Surface Act. I'm talking about the financial valuations and even the property valuations and cases. Okay. Then the biggest question is, as an young engineer, I just started earning, or I have not started working yet. So where is the money? How much should I pay? How much will it cost? This is the most common question lingering in the mind of an young engineer. Number one fees is enrollment fees. You need an enrollment fee of 2,100 and one-time admission fee of 5,000. This is for RVO, enrollment in an RVO, 5,000 and 2,100. And 50 hours course for classroom mode, 22,500. And if you are opting for online mode, if it's some 17,000, 18,000. And 60, this is not the common for all RVOs. I have taken one with the IOV, with whom I am having interaction for last May 30 years. So that is why I always follow IOV RVF. It is called Institution of Valuers, Registered Valuer Foundation. So many institutions have their own setup, but almost similar to that, maybe a few thousand here and there. I suggest to take the classroom mode, 22,500, and annual membership fee. This is not these two are one time, and this annual membership fee 3,500. This is 3,500 until you pass your valuer exam. Once you pass your valuer exam and you become a RV, registered empanel after your certificate of practice is already given to you, this 3,500 is increased to 10,000. So because now you will be practicing. At this stage, you will not be practicing. That is why the fees is only 3,500 until you pass and register as a valuer. Once you become registered valuer, you need to pay 10,000 a year to RVO. This is the fee every year you will pay as long as you continue to be a valuer, do a practice, which means your break even should be 10,000 per year. So you have to do valuation 10,000 for break even. Otherwise, it will not recover also your annual membership fee to the RVO. And again, the NISM exam fee is 5,000. And once you pass this exam, you have to register with the IBBI. This is the core of all the registration. This is again 5,000 again. So this fee is 5,000. You have to pay online. All this fee can be paid online, and all these fee attract 18% GST. So 39,000, about 47,000, 45, 47,000, near about 50,000, you can say. This is your investment to start your profession as a valuer. You don't need any other registration, and if you are starting a company and you need a GST registration, otherwise you can start practice as an individual valuer. So next question is, I'm spending this much and putting my efforts to clear this exam. How much can I earn? How much can I charge? How much fees you can charge? So here again, this is still a gray area. I can say there are earlier every bank is now giving certain guideline on how much you can charge, minimum, maximum, but it is not a standard. It is not a must. And only banks are giving for their empaneled valuers. Banks are giving their own, setting up their tabular column like this. What is the minimum, maximum, or percentage value? This is for a recent table is from State Bank of India empaneled valuer. You can charge this much, and as expected, IBBI is very silent in this matter. They are not giving any direction or any guideline, and this much minimum you can charge or this much maximum you should charge. Because here IBBI has addressed their concern. They have tried to eliminate their risk. They have done their part only up to the qualifying and monitoring the valuer. They have not addressed the other part, how a valuer can survive in the market. They have not addressed. This is one, in my opinion, a shortcoming of this IBBI framework. They have not given any direct communication or guideline. However, there is a wealth tax 1957. It was amended in 2009, and Rule 8C of Section 46 gives some guideline about the maximum fee. Again, it is giving the maximum fee only here. This is the maximum fee. On the first 5 lakhs of the asset valued, 0.5% of the value. And the next, if the property value is more than 5 lakhs, and the next 10 lakhs, 1/5 of the value. And the next 40 lakhs of asset valued, 1/10 of the value. Or any amount beyond this 40 lakhs, the balance only 1/20th of the value you can charge. This is under the Wealth Tax Act. why this wealth tax act is coming. Once you start filing your income tax and you are showing too much money you charged from valuation, and you are trying to give malpractice at you are bringing your own black money, trying to make it white by saying this is the value I charged for valuation, they will not accept it. They will accept based on this only, this percentage only. This is again not to address your concern. This is again the government is addressing their concern. So these every bank if you are doing evaluation for any bank, every bank is stipulating what is the minimum, maximum, and the applicable percentage also. Within that you can charge. So until this particular cost is addressed, the framework is incomplete. This is my opinion. Okay, next, what are the codes and standard? All these IBBI guideline for the examination and other things is all about the process, but the procedure, only these guidelines and standards, codes and standard will do it. Earlier, these codes and standard were done by the IOV, Institution of Valuers, and the manuals released by the ICI, ICMAI. All these institutions already started giving some valuation standard. Internationally, the RICS is giving a standard about the property valuation and even property measurement, how to measure a property also. The RICS has released some standard. There are few organizations, initially IOV and IAV, for all the civil engineering related, land and building related things, and plant and machinery things. But when it comes to the financial asset valuations, ICI, ICMAI, and ICSI, Institution of Chartered Institution of Company Secretaries of India, like this, they have released some guidelines, the professional guides for the practice to be done. This is about the technical stuff, while the IBBI gives only the procedure and framework. And internationally, this one organization has many contribution for the practice of valuation standard, property measurement standard, and the issues related to the property. Even RICS has recently released one guideline about the evaluation of non-registered properties. This is one tough task. If it is not registered, on what basis you will do the evaluation? There is no reference, recent reference that. So they have even given guideline of valuation of non-registered properties in India. So for that also there is a guideline. And they already formed one international valuation standard committee led by RICS, and IBSC have already released international valuation standards also. This is the book. IBSC is again a free download. You can go and see to understand how the valuation profession is done in an international practice. These are the technical guides, codes. And once you become a member of IOV or IIV or any of the RVOs are regularly publishing many handouts, valuation webinars, seminars they are conducting periodically to upgrade the knowledge, to understand what is the recent trends, and then legal compliance you need to follow. Okay, these are the codes and standards and governing the technical part of it. And then comes valuation approach. Valuation approach is what actually core valuer is doing. But here I will not go very deep, because this is what your 50 hours training course will teach. This subject cannot be taught in a webinar like this in 1 hour, 1.5 hours. So I will just touch upon the major approaches done in valuation. Number one is there are basically 3 approaches, whatever methods used world over. There are only 3 approaches used, both in real estate valuation as well as business valuation. One is the market approach. It is also called a sales approach, or comparison approach, or market comparison approach. Under many names it is called. but it is called a market approach. As the name implies, here you will only compare the market price of a particular asset in that location. So it is a apple to apple comparison, you say, like this apple to apple comparison, then make up some corrections for any differences between the two apples and then arrive at your value. This is one approach. Taking one recent case or latest sale happened at the place or latest purchase happened in that location, then multiply the factors of differences between the reference piece and your piece, and then arriving at your market value. This is one way. This is not so accurate. Again, there are inbuilt mechanisms to arrive at and tools available to arrive at the accurate one. The other approach is the cost approach. This is mainly used in land and building, or this is that is why it ended up being called as a land and building approach. Cost approach means how much cost it will take to build a similar building here, and then apply the depreciation and add the value of repairs you have done, and add the cost other the repair maintenance cost, your property tax, and this is called the cost approach. The other one is called the income approach. If it is a building or an apartment, how much income it can generate per year, and then deduct all the expenses like maintenance, apartment maintenance, then the tax, property tax, operating costs like electricity bill, then arrive at the value of the property. This is one approach: cost approach, income approach, and market approach. Whatever valuation is done across the industries, one of these approaches are done. There are many other approaches are done, but these are just an offshoot or just a branch under one of these approach, using the concept of one of these. This is called a residual method, summation method, depreciated replacement cost method, and the profit capitalization method. And there are many more depending on the class of asset you are valuing. There are many more. This is particularly for land and building and the plant and machinery. Here I forgot to mention something, that all the IBBI is focusing on only 3 classes of assets. What are those classes? Land and building, plant and machinery, and the financial assets. So in the slide number 5 or 3 earlier, we have seen about 8 or 7 classes of assets, like minerals, the gold, the precious stones, plantations, forest. All these are still not under the purview of IBBI. Please make a note of this. These are still not under the purview. Which means who are governing those valuations of forest? There are different bodies are there. You have to register with them. Even IOV is one of them, Institution of Valuers. You can register with them, and they have the mechanism. They have the guidelines for all those assets, how to value a mine. And I was a member there for a long time. I have read an article how to value a tree, how to value a wreckaged aircraft, or the wreckaged ship. All these are specialized valuations. So only the professional bodies have their guidelines. No government body is not, the IBBI is not authorizing or not even controlling them. Whatever is their headache, where their headache came from, they try to address only those concerns like land and building, real estate, and the companies and businesses, financial assets. So there are many other classes. Maximum number of classes are outside the purview of IBBI. So still those valuations are happening, but they are not common, and bank is not giving any loan against it, and so banks will be least affected by it, or yes, it will not be affected or least affected. That is why they are not bothered too much about it. Okay, then valuation process. Whatever approach you do it, valuation is done, the process is the same. Whatever any of these three approaches, only common sense determines which approach to be used where. For example, for land, you can have only market approach, because land will always appreciate. Most of the cases, 99% it will only appreciate. You cannot have any cost or a income approach. Empty land cannot give you any income, and empty land you cannot have a replacement. And also, mostly you will be using a market approach. For example, you take another building and the land. So what method you will do it? For land, you will do the market approach still, because land is appreciating. And for building, you will use either cost or income approach. Based on the rent you will get from that building, you will arrive at the rate, or based on the replacement cost and the deducting the depreciation per year of construction, you will again arrive at the cost in the cost approach. Then add these two values to arrive at the property or at the asset cost as a whole. So it doesn't mean that if you follow one approach, the whole of your valuation, you will do only one approach. You can do the multiple approaches based on the suitable selection. You do it, and then you can still arrive at a valuation report can multiple approach as long as you can logically justify your approach taken. And another thing is, as I told you, value is just an opinion. There can be two values of a same asset given by two different valuers, or you can give two different values of the same apartment or same asset, but conducted at two different times. 2 years before, whatever you give, you will not give the same value after 4 years. It may increase or even decrease also sometimes based on the asset and other factors, other environmental factors according to the actual site conditions. Okay. But the process is the same. What are the processes? First is the data collection. All available data from the client is collected here in this phase. The process is the same for all approaches. Whatever approach you use, you will collect the data. This is internal data collection, because you will be doing in-house from the office, from the available data, you will collect from the client. Then property inspection and market data collection. You will really visit the site, and physical inspection of property is conducted, and all the required data from the market area is collected. Here, what is the recent land sale or purchase happened, and whatever any highway improvement is coming, any road widening is happening, because of that this land is going to be acquired or not. All this data you will collect from market. Any IT park is coming around, any new development is coming, any secretariat is coming, all that also you will collect as part of the market data collection, because these factors also include your any metro line is coming also will impact your land value or your property value greatly. So you will collect all these kind of market data in this phase. Then you will analyze the data. This is where the real experience and expertise comes. The valuation process is started by analyzing the documents and market data. You have to combine the internal data and external data and start doing the analysis. Then application of value approaches. Here is what, again, your expertise and your experience matters a lot. Choosing which methods, which approaches are to be used for land and building separately, and choosing the right valuation approach, and then selected the arriving the value. This is exactly where you actually doing the valuation. The value of the asset is arrived here. Then report review. You have to prepare a report. Report is reviewed by a certified valuer to verify the information and approaches used. Here, I have mentioned a word certified valuer, because the certified valuer always will not do all this groundwork, because at a senior guy, he will not do it. Only the junior people will go, junior valuers will go, and they will do the report preparation and all. The senior guy will only review the report and verify the approaches selected is right or wrong, and then send out the valuation report, first draft, to the client for their review and comments. And once based on the comment, the final report is issued by the valuer to the owner for the purpose of the valuation done. So the client again will carry this valuation report to the financial institution, or he can take a decision based on the value of the asset you had given. Okay, this is the general process adopted. Okay, Mr. Vinay, already 1 o'clock is there. Do you have any time, or I can take another 15-20 minutes more?
Yes, sir, you can take it. As we started late, you can continue.
Okay. Now you have done all the effort, you know about the valuation, you become a valuer now. What are the opportunities available to you now? So I started telling that valuation was once a post-retirement assignment. Now evaluation has become a full-time employment opportunities for many. I have worked in some organizations where I have seen valuers at their early 30s or late 20s. Because when I started evaluation in 2000, 1995, 96, 97, at that time I learned valuation from older people. I was the youngest valuer at that time, a budding valuer. I cannot say valuer also at that time, junior valuer, we can say. So now it has become a full-time opportunity for any guy who's serious about becoming taking valuation as the career or as a profession for the lifetime. So here again, thanks to the economic development and the liberalization that happened in 1990s. After 1990s, many foreign companies came into India, set up their businesses, and IT boom started at the time before 2000. So all IT companies came. When they came, they have to set up an office. Where they will set up an office in the real estate, they have to go and hire space from the real estate guys, whoever the builder, whoever is built. But what kind of trust these builders, the foreign companies coming from outside, what kind of trust they can have on these real estate developers? Any exploitation can happen. So the international property consultants made their presence in India to convince or to mediate between the international companies and the local real estate developers. And these are called IPCs in short, and these are called real estate brokerage companies or international property consultants, I can say. These are some of the names, known names for you. I have worked in some of these companies. So these people started, these are basically real estate brokers. There were brokers in India also. There are well-known brokers in India. At that time, when I started valuation, I know only one company called Hanu Reddy Realities in South India. They were the only real estate brokers. After the presence of the liberalization and many abroad companies came and started taking up office space in India, like software companies, and they didn't have trust on the local brokers and local developers for fear of getting exploited. So they started bringing these international expertise to act as a mediator between the developer and these software companies. So that is how these companies started their presence here. Once the real estate deal is over, then they started, what next? Once the IT companies started taking up the space, and then the project management need to be done. So they have their project management division. All these companies have the project management division. Then all these companies have valuation division. All these companies have real estate consulting division. They have a full the spectrum of services related to real estate. That is why for the IT companies coming from abroad, it is easier to deal with this one company for all their real estate needs. So valuation is one of their part. The valuation comes at the real estate transaction stage, where you need to know what is the value of the asset you are taking over, or when you vacate the space, and on what basis you will clear the terms of settlement. At the time also valuation like a scrap value or salvage values comes to matter of importance. So all these companies have their valuation and real estate consulting divisions, though these people are engaging people in large number. I have taken only the top names in the industry. There are 1,000 other smaller international and Indian companies offering employment opportunities to young valuation professionals. And in my opinion, you may not be directly getting an employment opportunity when you start taking up a career. You may have to work in smaller organizations for 1 or 2 years. After that, you can get into these companies. These are all about real estate transactions. And have you ever heard of the Big Four names? Big Four. They are in the industry. They are called Big Four. These are Ernst and Young, and
EY, PwC.
PricewaterhouseCooper, Deloitte, and KPMG. And these are basically the accounting, management, and financial consultants. And they are also doing real estate valuation, and they have business valuation also. And they have real estate valuations, and I have seen several articles related to real estate price variations over the years and how the COVID affected all these. They are deep into this kind of valuation business also, both real estate as well as business valuation. So these are the big names I have taken, and there are many other smaller national and international players, those who are employing young valuers. Okay, now next question is the future of valuation. Okay, today is okay, fine. Going forward, what will happen? Don't worry, things are very bright, but there are drivers of change here. You need to understand what is going to drive the future of valuation. See, COVID and the international financial crisis, they have changed the expectation from the clients, and they have made the role of a valuer emerging day after day. And like many other professions, valuation is also undergoing many changes because of these global happenings and the geopolitical conditions. If you understand what exactly is changing it, and if you start addressing towards it, you will be part of the future of valuation. Number one, the evolving client requirement. Because of recent challenges in COVID and global financial crisis and all, the client requirement got changed. What they are looking at is changed, and then the valuation assumed even more importance because people started worrying about their money too much, and the different consequences, risk assessments they need to do before making the financial decision. So the role of a valuer is also changing from just giving the fair market price in the report form. The valuer's role also changing from an important stakeholder making an impact on the decision making of the client. So the value of the role of the valuer also changing, which means the value of the valuer is increasing a lot now. Then the sustainability initiatives taken at the global level is playing a very important role. Sustainability is assuming too much importance nowadays because all the organizations, they are at the pressure, it's a peer pressure, at least I can say, and to manifest their commitment to the sustainability. So because of that, sustainability has become an important consideration in the valuation practice also. Then comes the big data. Big data is all the high-tech words, the 7 V's, the veracity of the data, variability of the data, all these high-tech is called big data environment, and the new market entrance. Because of these new opportunities, many new market entrants will come. What are the new market entrants? You can say, if you type valuation report, there are websites already available. For a cheaper price, they can give a valuation report. But I don't know whether these are already accepted under the IBBI governed, or whether they will be accepted by the financial institutions. But there are even Indian websites, those you have to upload all the document over online, They from their market data, whatever they have already built, the big data already have it. From there, they will be giving you the valuation reports also. This is an unexpected entrant in the market. We are all talking about 50 hours training valuation exams, but this kind of small websites and applications are emerging out in the digital space to provide the same services. These are the new market entrants. And this is again an employment opportunity for young valuers. Then intelligent valuation platforms. This again related to the apps, valuation apps and the websites. This is the data. So what is the big data and what is data? Data is I can say unsanitized, unprocessed raw data. This is the data which is already built by the individual as valuers. This data is built over a period of experience. There is no standard. Every individual valuer is having their own database. This has not come into the common work environment so far. This is still lying as the intelligent property of the individual only. So this individual insight is not coming as a common asset so far. Maybe in future, this data will be merged with the big data and available in the common data environment. Then the automated technologies. This will again generation of reports as the quick solution, so that you will have a faster solution without affecting the accuracy. So this is what the automated solution. Then the specialization, as I told you, the evaluation of a new type of assets. For example, I can say there are 3 assets are there. One with without any green building certification, one with silver LEED silver certification, one with a LEED platinum certification. What do you think will have the maximum value, and what do you think has the maximum marketability? One with the platinum has the more marketability and more market values because of 3 reasons. Number one, the one with the platinum certification has already invested a lot in energy saving and the LEED commitment certification process. So they already spent a lot. So that amount will come as a increased value of the asset. Number two, the running cost. Once you have already set up all the cost saving or the energy saving equipment, already infrastructure inbuilt in your asset, so your running cost year after year will become a big savings. So you'll save on a lot. So because of that, the value of the asset is more. And number three, all organizations, they want to boast that they are operating from a platinum certified building. So this will again is an intangible value to the asset. So all these 3 things will increase the value of the asset. This is the specialization which came in the last maybe assuming importance in last maybe 10-15 years. Before 40 years, this LEED is not even a consideration while giving evaluation certification. So this kind of specializations will more come. Now the workplace wellness certification is also there. Well certified things are now coming. So this comes about the workplace environment things. So if you are if the well certified people have already involved in that framework, if the property is developed, it will assume more value in future entirely. So this is called specialization. It becomes one of the drivers of change. Then the global cities. Now we are talking about smart cities with the smart solutions. So an asset within the smart city with the smart solutions will assume more value. These are the drivers of change. Once you understand the drivers of change and you become part of it, or you equip yourself in those areas, you will become indispensable in the future of valuation also. Okay, now ESG. Again, the sustainability again comes into picture now. All the standards, whatever I have recently gone through, they are going with ESG as part of valuation consideration. In environment, you will think about greenhouse gas emissions, environmental protection expenses, waste management, 5R principle, reduce, reuse, recycle, restrict, like this. This is how you do the waste management. When you come to social, the environmental is all about land and building assets. When you come to social, the labor practice, the human rights, the societal and product liability. When you come to governance, processes, and your organization structure, how your organization process assets are structured, this also matters as part of the governance. And competency of your team, your culture of an organization, behavior, and the team dynamics. All these are important when you value a business. This may not be as important in land and building, but when you value a business or an organization, company for takeover, for any merger acquisition, and the social and governance also becoming important. You have to consider all these things in the valuation of the asset. Okay, now the most important what all the youngsters are looking for, AI in valuation. Will AI may take my job, or AI will help me, all that. Okay, so how the AI will impact the valuation as a procedure. Your market research platforms will evolve with embedded in AI. AI will be working in the background. Particularly like audio visual, you will not feel it, but you will not see it, but you will feel it. The result of AI embedded valuation solutions, the market research platforms will evolve. Digital valuation tools will come. What these tools will do is just key in the details, and then from the big data, they will take the trend curves, and from there they will give you the project the future value of an asset. So then the big data integration of already big data will be there with the tools, so you can integrate it. That is how the new platforms like websites and apps have come for valuation. It's already there in practice in India also. And in India, these platforms are doing well for visa applications. Here, nobody is giving the loan. It is just aiding the visa officer just to decide whether to give a visa or not, the tourist visa to B1, B2 categories. And nowadays, people are taking this in 1 or 2 days, you will get the valuation of your asset and then take it. So at least if not for bank purposes, at least for this kind of purposes, these digital valuation tools and platforms will be of great help. And this is the AI revolution, I can say. Then the natural language processing. For those who have already taken FITArb and STAT, you are not doing the coding like how the SAP was doing some 20-30 years before. Some microprocessor programs were there developed for the structural design and other engineering design packages. Hello? Am I audible or am I talking to myself?
No, sir, you're audible.
Okay, people are silent, so I don't know. I just want to confirm it. Otherwise, at the end of the 1.5 hours, I don't want to hear the bad news that I was talking to myself. So this natural language processing helps, and in where it is helping, the data, the report preparation. So if the AI can understand the lingo of the valuation, it will use the appropriate language so that you will not even notice that it is done by a machine, or so you will have a natural language which will sound your report like any other expert valuer has already prepared. This is how the NLP is assuming important was part of AI revolution. Then collaboration and communication. So earlier evaluation was done by one person or the small team of people. Here, once the stakeholder number has already increased and the requirements also increased, the layers and levels have increased.
अच्छा ये अभी शुरू होना मैच
Hello? Hello?
Yeah, someone disturbance. Don't
Yeah.
mind.
So the collaboration and communication, this ends up us in the common data environment, like your the Revit common data environment. You can have the costly data also flowing at different levels, and that is how the 5D BIM is coming into existence. And then 5D BIM is very much used in the valuation. I can explain to you in the coming slides how the 5D BIM helps us in valuation profession. Okay, AI in valuation, it has advantages like there is an enhanced data analytics will be there. Okay, then the process automation can be done. I've already explained. Then the predictive analytics is there. What is predictive analytics? The analytics are about 4 types in my opinion. One is the reactive analytics, one's reaction to the situation, and proactive analytics is there, predictive analytics is there, and preventive analytics is there. So in this at most is the predictive analytics, where you are forcibly trying to enter some wrong values. It will give you, the cost trend is like this, whatever value you are giving is wrong. Like this analytics can help us to predict the right value by extrapolation of values in future or past also. Okay. Then portfolio management as a whole, as I told you, like how IPs are doing is not only your valuation. Evaluation can be extended towards the post the business decision also. Your engagement can continue until the disengagement of the asset. So the entire portfolio can be managed by the organization. AI can help it from end-to-end solution to the clients. And it has some disadvantages also. The data availability, see it's a recent trend. AI is a recent trend. Not all the data has already gone into building up big data. Still, many scattered data is available as individual IPs, intelligent properties. So these are available with individual small companies or individuals expert valuers. So this availability is still scarce. It will take some more time for the data, all the data, market data, to be built in as part of the big data. Then market transparency, still for want of for fear of losing of identity, some data is kept as a secret. So transparency has still not come. It will take some time to mature for any industry. So the AI in valuation also will take its own time until its maturity. So then the property condition. See, this is one important point where the current status of the property is not updated in the big data environment. Cannot be updated also unless you have some sensor to take what is the building condition and then make it as part of the valuation process to arrive at the value. For example, if the building is in a bad condition, it's not maintained, and the drainage is already choked, always it is an underlying area. So these things cannot go into the automation, or the AI cannot identify all these things because there is no sensor everywhere. Fixed sensor cameras are not fixed. At least if these things are there, it is impossible, practically impossible to fix sensors and cameras everywhere. So the actual property condition and updating it in the system cannot happen in the artificial intelligence. This anyway has to be done by human separately. And lack of interpretability. So these the current the valuation valuer fraternity is not trained for interpreting the data how the machine is interpreting. So we have already taught the machines to think like human beings, but we have not taught the human beings to think like machines so far. So the lack of interpretability is again a disadvantage when you use AI in valuation. So incomplete contextual factors. This again only humans can give it. For example, if the property is located in a new development or suddenly assuming importance, like Ayodhya suddenly become after the temple opening, all the land prices gone up. So this will not. This is contextual, right? It can happen only in that location. It's only in that road. So this AI cannot quickly capture this. Maybe after 5 years, when you want a historic data, AI can tell what is the land price fluctuations in this or increase and decrease after the Ayodhya temple. But at present, you cannot get the contextual factors already embedded in the AI. So this is one disadvantage. This kind of immediate happenings will not be embedded quickly. Maybe 10 years down the line, you will have all the data, more data in fact. And there's a lot more difference between how the building is utilized or how the asset is utilized, whether residential or commercial. It has a lot more difference between the value and what you are looking at while arriving at the numbers. So the machine cannot differentiate residential and commercial. Very difficult nowadays. So this has not come into use at least until now. Then the security and privacy risk. Like any other industry, the cybersecurity attacks and then data leakages, this valuation, some of the confidential information leaking is also possible with the AI. AI bots can now intrude into your computer and steal away this information. This risk is still there, and this is seen one of the disadvantages. Then the big one is the regulatory. Whatever happening in the regulation, sudden things are happening, and then that cannot immediately go into the AI environment. This is similar to the contextual factor, but the regulation can change more frequently than the contextual factors. Regulatory can change the registration process, registration fee, everything can change more quickly than the contextual factors. This cannot go in there is no way that AI can quickly capture this, at least until now. Now, finally, I want to explain it how the FID BIM is practiced can be practiced, or it is already practiced in some countries. Vinay, do I have some more time?
Yes, sir.
Okay. So you might have come across a term called life cycle costing or total cost of ownership. These are the concepts used in cost engineering or any business valuation also. So now we'll try to integrate, we'll try to see how these concepts are integrated into asset valuation and property valuation. Well, see, when you say life cycle cost, there are different underlying factors to it. The life cycle cost of the building, planning, design, and construction. And what happened once the building is done, the operation and maintenance. Then until the demolition, overhauling and demolition. So life cycle cost of an asset or as a machine is from the date of manufacturing or procurement and until the disposal, including the cost of disposal. So life cycle of whatever cost associated, income or expenditure associated with the lifetime of an asset or a property or a building or a machine or a business is called a life cycle cost. So this has many components under this. For example, one building can have a design and site clearance expenses, and then capital cost, land acquisition, commissioning, taxes, project management expenses, all this you have. So when you go further level under the design and construction, there will be architectural, structural, mechanical, like this, electrical, all these are there underlying. So all these costs have to be summed. This is like a bottom-up approach. All these costs have to be summed to become cost element. From all these elements are coming to the higher element, then ultimately arrive at the life cycle cost. This is the cost breakup of any life cycle cost elements. This is applicable for any building or business or any asset, you can say, for example. So this is the concept of life cycle cost or total ownership cost. Total ownership also is a similar concept which is coming in between, is not covering the whole life cycle. So for if it is for a machine, you will not think about planning, design, and manufacturing of machine. Your total cost of ownership is from the time of your procurement cost, your operation cost, your overhauling cost, your disposal cost will come. So it is, I can say, TCO is the subset of life cycle in one way or other, by definition at least. Okay, this life cycle cost, how it is done in a cost breakdown of an asset. See, so this picture gives as an overview of how there are different layers, where the life cycle cost is sitting in the property's value. If you look at the topmost level is the property's value. The next level will be some technical attributes and economical attributes at legal factors, and environmental attributes and local factors as the another second level. When you go to third level, in the technical, your life cycle cost of an asset will come, because that contains all other things, your technical things and related cost. Then the building age, design quality, these are external audits will happen about the design quality based on the age of the building. So these also will come at the second level. Then when it comes to economic and legal framework, your future income, how much will it come, and the fixed cost, variable cost, all these come. These are operational costs. So this is the economic and legal framework. Then the environmental framework will come as the topography. Because of the rainfall, you want to raise the level of the land. All this cost will go here. So all this information will be at the level 2. And when you look at the level 3, all the life cycle sub-components will sit in here. Whatever you see in this slide, all the cost, you can see all these: construction, architectural, all these are here, architecture, structure. And when you go into the architecture wall, all are there here. The structural elements are all there here. This is how the cost breakdown structure of any asset will look like. This has multiple layers, and each layer has its own level of detailing, like LOD in the BIM. This is similar to the cost in the cost breakdown structure. This is how all summed up together you will have properties value. This has all the incomes and expenditures. You can see some taxes here also. Fixed cost, variable cost, and taxes also will come here. Okay, so all the income and expenditure of related to the property over a period of its lifetime will come into play to decide the property's value. Okay, next is the BIM overflow. How to integrate this into the BIM environment? You might have seen after 3D, 4D, 5D, 6D, 7D BIM, all that you would have come across. Like 4D is related to time, your project schedule. 5D BIM is your cost, all the cost data in this form, in the cost breakdown structure. All this will sit in your 5D brain. Related to that, all the element like architectural, civil, mechanical, like this. So this slide shows the BIM-based workflow when you are in the BIM environment and you want to do valuation, how to do it. And at this level, you will get gather the building's as-built information. From the as-built drawing, you will generate the 5D BIM simulation will be there. So this will give all the cost data related to the structure. And this cost estimation model will give us how much in today's context, how much will it cost. Then you will insert the preferred income from this, the current cost, whatever the revenue this asset can generate. And discount for the rate, inflation, risk, all this rate you can discount. Then add for the legal factors and economic factors like taxes. And then assess the environment factors by the comparison method. Here you will land cost, all that you will assess it, land cost. Because this 5D BIM will not have the land cost, you will have all the constructed building. But land cost you have to assess it separately and then inbuilt here. So this is how you will calculate the net present value of the property. Then calculate the final price. This is the BIM workflow of valuation of working out assets net present value based on all these factors under the BIM 5D BIM environment. So we'll see what are the tools and techniques here. So for the 5D BIM, these are the inputs: architectural drawing, structural drawing, MEP drawing. All these your product information, your warranty, all that will go into the 5D BIM model and provide the cost data. And again, from these, you will work out the material takeoff, all the item rate will come, project planning will happen, and then room schedule. From the room schedule, you will take all the interior elements, and the life cycle cost will be arrived from here. This is the BIM workflow. This is the basic drawings. From here, you will assess the functionality. The functionality cost will go to the life cycle cost. These are the layers. The whatever layer we saw, it will come act as in the reverse order, and then the life cycle cost will come. Then the economic cost, you will add other buildings, technical cost, financial, legal cost, environment cost, you will add. These are the inputs again. And then final price estimation model. This is actually you will use a different tools and techniques. This is where your approaches will come into picture, and AI can assist in generating these data or whatever list of data, validation of data without losing the quality, or the AI will help here, your tools and techniques. And finally, the output is the properties value, final value you will get it. This is the BIM workflow through which you can assess the value of the property. This is how 5D BIM also assuming importance. Okay. Next question is, will AI take over my job? One day we were talking about all the AI, will it take over my job? It cannot. But people, those who know how to use AI will take your job. How? AI and the valuer are complementary to each other. How? AI can enhance the valuer's capability by automating repetitive tasks, while valuers bring market expertise and contextual understanding that AI currently lacks. So what AI can do faster, quickly, without losing the quality, people have to spend long hours. And what the valuer brings, the market expertise and contextual understanding, AI cannot do. So this way, AI and the valuer have to work in tandem to give a more reliable value of an asset. So by leveraging AI tools, valuer can concentrate on high value tasks such as analysis, interpretation, and decision making, further enhancing their role and providing valuable non-procedural insights for clients. So AI cannot take your job finally. So this is where I want to end up. Sorry for taking up more time, and my apologies for some technical glitches, whatever it is. Thank you Vinay, for giving me this opportunity to share my experience or whatever with the young engineers. And I already wish you all the best, so that at one point of time in future, you will get a similar certificate of registration from IBBI. And for your information, I have not yet cleared this exam. So I was doing evaluation for long and for some time. And before this IBBI came, I already migrated outside India. So in the distant future, when I go back to India, I may sit with one of you to write this examination and get my certification. Thank you. I'm open for any questions.
Yeah. Anyone want to ask any questions? Unmute yourself and ask.
Good evening, Sivaraman sir. It's a very good section actually. I can see the portfolio of yours, like you worked in CBRE and CNW and JLS. Can you share the work experience over there, sir? Like how will be the work culture over there, and do JLL hire subcontractors to do their work, or they really get into field?
No, I have not worked in JLL, but they operate on a different model. There are different models each company is operating. One is the
Like when
GMC
it
model. Yeah, the JLL is operating a GMC guaranteed GMP model, guaranteed maximum price model. So they commit one number, and to adhere to that number,
they are not into construction, like real-time construction, like builders or developers.
No, they are not into construction. They are like in EPC, they are like a EPC contractor. In oil and gas terms, they are like EPC contractor. They commit one number, and not EPC, EPCM, construction manager. They are like a construction manager. They manage all that for a client for a committed number.
Okay. Yeah, fine, sir. Thank you.
Yeah, more. Anyone want to ask any questions? Can unmute yourself.
Sir, how an emerging engineer recently passed out can come into valuation field?
You can very much. First, I gave you the steps also. Go through these steps. These are the roadmap for any young engineer. Same steps. where I go. These are the steps. These are the steps. But for that, you need to wait until 5 years. Because this 5 years, how it came into existence is not only applying all your civil engineering knowledge alone, or your business or commercial knowledge, financial knowledge alone. It's a interpretation of law, application of law are also there. Now, more than interpretation, it is application of law, under which law it governs, and then you have to ensure compliance also. That is why you have to understand the law. So for that, you need at least 5 years of experience and this 50 hours of training to know the language of valuation.
Okay, sir. Thank you.
Yeah, any more questions? So those 5 years experience in any domain, or like
In your domain, if you are asking for land and building, you should have done practice of civil engineering for 5 years. And if you are acting for plant and machinery, you are mechanical, electrical, both mechanical, electrical also, okay, electrical, electronics, your own domain, the domain in which you are qualified for. Nothing related to valuation. Nothing related to that. They don't say valuation.
Sir, if you don't mind, can you please share the PPT as many people are asking?
Okay. Now who is asking this? Vinay?
One of
Yeah.
the members is asking.
Okay, okay. I will share it.
So for these 5 years, how we are going to learn those valuation?
Yeah, in these 5 years, what you can do, you can become member of, I will not suggest to become a member in the RVO. There are institutes like Institution of Valuers and Indian Institute of Valuation. These are two institutions are there. So the membership fee, I think 2000, when I joined, it was few hundred. Now I think 2000, 3000. Don't spend much, only this much. You become a member there. And what you will do in these 5 years, along with your regular work, they will publish the Valuer magazine. There is a magazine, bi-monthly magazine coming in each of these institutions. So you go through these articles, and in India, every now and then, at least in every 6 months, these Valuer conferences are happening, valuation webinars are done. All these by these organizations only. So take part in all these webinars, seminars, so that slowly you will become acquainted to the valuation terminologies, how the business works, what to look for. So once you reach these 5 years, during these 5 years, you can't keep quiet. So you become slowly acquainted with the industry, valuation industry. And after 5 years, you can become a primary member in RVO. And then, because once you join in RVO, it's a huge cost initially, 5,000, 10,000, then again every year 3,500 you have to give. So I don't recommend to join immediately RVO. First join in, become a member in IOV. This is how I did. I became a member in IOV once, but I no longer a member.
So any of the internships like that available for this stream?
That you have to locally check with all these companies. There must be the internships, because as I told you in the valuation procedure, I told you the valuation procedure here. Who do you think will go to the actual physical inspection, all this data collection? This will not be done by senior valuers. So junior valuers will go, or sometimes the same organizations, whoever I have mentioned, they can choose to have their internships, so that they can train you to what to look for when you go for a physical inspection of the property and what kind of data collected and how to validate the data, all that. So this role can be done by internships also. You can apply for internships to carry out these roles, actual field inspection, data collection, and validate the data, and to some extent data analytics. But as an intern, you will not be able to do all the, you will not even complete the data analysis also.
Sir, is valuation one of the best option to earn good in civil engineering?
Certainly a best option.
Okay, thank you. Thank you, sir, for spending your valuable time with us despite your busy schedule. I'd like to thank everyone who have attended the session. It's been a long session, around 2 hours, more than 2 hours. Thank you, sir. Thank you for
The one of the biggest challenge for me to accommodate this within 1.5 hours. There's one problem with elderly engineers. Once you tell them to start talking, they will not stop.
Thank you, sir. We'll surely be in touch with the CE.
Okay, thank you. It's my pleasure to share my knowledge with you guys. Hope it was a bit useful to you.
It was really insightful. We gained a lot of things.
Okay.
Thank you. I think we can wind up.